Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. Why Shopify stock can stand alone against Amazon, but Meta is crippling Snap stock. Is Snap stock a loser?
I think Snap is a loser. I think it was always a joke site meant for teenagers. If I was on Snap this morning, I mean, it's just a joke.
Well, I've got a 19-year-old who uses it a lot.
Becky, people invested in this. They're debating right now what the hell they were thinking. And yeah. I don't think it's a real company.
Clearly.
I think it's just a really interesting, funny site for 18-year-olds to talk to each other without their parents seeing it.
In this video, I'm going to list the top 10 Wall Street darling stocks and 2 loser stocks that Jim Cramer named and why. Let me know what you think about Shopify. Have you tried drop shipping? Do you remember a couple years ago, Jeremy Financial Education said Shopify could join the $1 trillion big boys club someday?
Over the long term, I think this company can be a $1 trillion market cap company, okay? But over the next decade, I think they have the ability to become a $1 trillion company, a gigantic tech company. Let's just put it that way.
Back then, Shop stock was valued at around $200 billion at $2,000 a share. Then inflation started and Shopify stock, along with all the big tech growth stock, tanked to 50 to 70%. That's when I can finally get into Shopify stock. The reason why I can't buy Shop stock before 2019 is because first my money was invested into Facebook stock back then. Shopify is growing too fast, and the stock price is going up too fast for me to build a meaningful position. You know me, I like to buy the crash. However, when you think about it, Facebook or Meta stock really didn't perform so well over these years. Since 2017, Meta stock only up 271% compared to Shopify's 1,815% till this day. That's 7 years of time, bro. It just has had so many times of huge ups and downs. Not a good ride at all. Unlike Shopify stock, smooth sailing, bro. One thing I think Shopify is winning and can stand alone against tech giants like Amazon is that it has a social trend going.
For a brand new way to build sustainable passive income, over to Google and type in shopify.com or hit the link in my description if you guys want an extended free trial. Click on Shopify and click Start Free Trial.
People are starting successful Shopify dropshipping YouTube channels in 2018 and give free marketing and advertising to Shopify as a company. That really turbocharged its growth. I think forget dropshipping. That's another full-time job. Just invest your money into Shopify stock instead. Of course, this is not financial advice. Your money, your responsibility. Seriously, Shopify has very beautiful balance sheet. Current ratio at 7, meaning they have cash loaded to the cloud. Well, they are a cloud-based software company, right? It's the future, bro. I know they are still not profitable, but they have free cash flow by slowly diluting shareholders like me. Well, they can keep growing their TAM and stock price as long as stock price goes higher. They are not running out of their cash anytime soon. Another reason is Wall Street loves this stock because e-commerce uptrend is real, unlike vegan food. Look at Beyond Meat stock, $7. Jeremy thought it could be the next Tesla. Ha 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 ha.
All I ask in return for this video is that you guys smash that thumbs up button. I appreciate it. This is a lot of research work goes into these videos each and every month, and all you got to do is just slightly hit that thumbs up button for me. Maybe one of these acai bowls. Oh man, those things are good if you're like Tattoo Chef. But that one represents like insane growth. I'm also invested in another company called Beyond Meat, ticker symbol BYND.
On Shopify, which, Mike, if you zoom out and look at a 5-year chart of this stock, it's been on a monster run.
This is a company that's trading at a pretty lofty valuation, and
it is one of the Wall Street darlings. That's why it just keeps on going higher. Today, Shopify is over the $100 billion mark. I would never sell my Shopify shares I bought in 2022. Amazon is a giant with a lot of depth. Giant moves slow. Compared to Shopify stock since Shop IPO, Amazon only went up 336%. That's why I'm not in AMZN stock, because Shopify is such an innovative company. To prepare for an AI-driven future that paves the way for dropshippers' unparalleled growth and success, Shopify is introducing their groundbreaking commerce-focused AI, Shopify Magic. Magic connects the power of Shopify and a merchant's own data to make it work better for them. It enables unique, personalized page and content generation, like instantly crafting an About Us page in your brand voice and tone. It can transform product image backgrounds with just a few clicks. AI will help you write better product descriptions. Shopify Magic AI Sidekick Bot will give you personalized facts. It will also help you write your marketing email. It will save so much of your time. It will read your mind, so you don't even have to think. Of course, I am just kidding on that last part. To be fair, that is the power of Gen AI. It's magical. Of course, you are listening to Audacious Money Witch here, talking about AI magic, not real magic. Shopify raked in $1.7 billion in revenue, with a 25% year-on-year growth for Q3 2023. Shopify laid off 20% of its staff, more than 2,000 people, in June 2023, and sold its logistics business to Flexport in exchange for 13% stock. Now let's get into the top 10 Wall Street darling stocks. I am using ShopStock in terms of performance as a benchmark since ShopStock IPO in 2015. Number 10, Google stock up more than 437%. Number 9, Apple stock up more than 469%. Number 8, Meta stock up more than 481%. Number 7, Netflix stock up more than 530%. Number 6, Amazon stock up more than 715%. Number 5, Microsoft stock up more than 796%. Number 4, Tesla stock up more than 1,070%. Number 3, Shopify stock up more than 3,300%. Number 2, AMD stock up more than 7,000%. Can you guess who is number 1? Right, it's Nvidia stock up more than 13,000%. Since you have watched it here, I will give you a bonus Wall Street darling stock. It's performing better than Meta. The stock is Lululemon, up more than 660%. Can you believe Jim Cramer actually called Nvidia stock a loser? Listen to this.
I'm concerned about NVIDIA. At the same time, they haven't been able to make the transition yet to being artificial intelligence, virtual reality. We're just not there yet. Machine learning. So we've got the high-tech stuff not there yet producing earnings, and we have the lower stuff being hurt by this Ethereum transfer. David, I don't know how much you follow Bitcoin, but Bitcoin seems to be another thing that the Fed is sick of. And we're short NVIDIA, it's a loser. And we're short NVIDIA, it's a loser.
Cathie Wood was actually buying the dip when he called that. Guess which stock Jim Cramer also called a loser? It's Snap, the parent company of Snapchat, the real anti-social media company. Is Snap truly a loser stock? Let's find out. Snapchat founders lose billions as stock crashes. I don't think Evan is happy to lose either. Shares of Snapchat parent Snap had a historically brutal decline last Wednesday, wiping out about a quarter of the social media firm's billionaire leaders' fortunes in the process. Snap stock crashed 36.5% to $11.11 by market close, registering its third steepest daily decline in Snap's 7 years as a publicly traded company. Snap co-founder and CEO Evan Spiegel's net worth simultaneously tanked by $1 billion to $2.9 billion Wednesday, a far cry from his $11 billion nest egg in early 2021, when Snap stock traded at over $50 per share. 87%. That's how much Snap shares are down from their September 24, 2021 peak of $83. Consensus analyst forecasts expect Snap to become profitable for the first time in 2027. I listened to Snap's earnings call on Tuesday. CEO Evan Spiegel faced questions from analysts about why the company is lagging behind competitors. One analyst asked Spiegel if Snap's smaller size compared to Meta represents a fundamental long-term issue. Spiegel responded by saying that Snap is currently one of the largest internet services. And while some platforms are bigger, I think there's enormous opportunity for us to continue to grow our business. Obviously, we wish we were moving faster, but we're working as hard as we can, Spiegel said. Both Meta and Snap were hit hard in 2022 due to a weakening ad market and Apple's iOS privacy update, which made it harder for social media companies to target users. Meta's ad business grew 24% from a year earlier. Snap reported an increase of just 5% year over year. Its sixth straight quarter of single-digit growth. Smaller is nimbler. That's not true in this case. Spiegel said Snap is investing heavily into machine learning and AI technologies to enhance its online ad platform. Meta's platforms are much bigger than Snapchat, meaning that they have more data and users to work with. Snap has recently tried to distance itself from the broader social media universe. Advertising is still what matters, and the reality is that it's competing for the same social dollars. It will go up after the Fed cuts and eases the market with extra social dollars, in my opinion. The stock crash is because the Santa Monica company is now projecting an adjusted EBITDA loss of $69 million. a wider loss than Wall Street expected. Why Snap stock is a loser stock for now is this. Not only has it had crazy crashes out of the last 8 quarters, every time earnings come, Snap stock plunged at least 10%. Its biggest one-day crashes were 43% drop in May 2022. Yes, it's almost Valentine's, so it's not for the faint at heart. The longer a stock goes sideways, the bigger the move it will expect to get. Snap has built a long sideway base. We will see if it can snap back.